All right, let's go to Yahoo Finance's Brian Cheung, who has been standing by. Saw him at the top of the segment. Brian, let's go through your thoughts on this jobs report, and we'll start, of course, as it relates to how the Fed may be thinking about the economy here, and certainly if this kind of report is in line with the statements we've heard from Jay Powell about the health of the recovery and the need for more assistance as we get into 2021.
Well, Miles, it's a little bit difficult to map out because the Federal Reserve's last projections of what they offered for what they could see the unemployment rate ending the year 2020 at was back in September. So obviously there's been a lot of data since that point in time. But in that September FOMC meeting, the Federal Reserve projected the unemployment rate ending the year at about 7.6%. Now, as of the October jobs report, we had already been below that. And the improvement that we saw in the November jobs report just a few minutes ago does seem to underscore how this recovery is indeed going a bit faster than even those economic policymakers within the Federal Reserve had projected. However, what is the same compared to what the Federal Reserve officials have said in the previous weeks and what we saw in the jobs report this morning is that this jobs recovery is indeed slowing. And we saw that as the case with the unemployment rate ticking down slower than it has in previous months, in addition to the total amount of payrolls added being slower than previous months. And what we also saw was that permanent job losers were about the same at about 3.7 million, unchanged between October. What was interesting, though, was that when you look at a number of other metrics, it does look like it's more of a swoosh-shaped recovery overall. When you look at things like total people on payrolls, if you're not looking at the change month over month, the total levels of people on payrolls is not getting much closer to covering or closing that over 10 million gap that we know is the amount of people still on the sideline unable to get a job. Same is the case if you look at something like prime age employment rates. So people over the age of 25, that it's really about stagnant at about 76% if you map it out between October and November. And then Julie just underscored this. It's a very uneven recovery as well. Even though the headline unemployment rate went down to 6.7%, the black unemployment rate remains in the double digits. That's not the case for the white, Asian, Hispanic unemployment rate. So black workers in this country still facing a 10.3 unemployment rate. Now, that's also the case if you look at different types of educational attainment. Those that have bachelor's degrees are only 4.2% unemployed right now, whereas those with only a high school diploma, about 7.7%. So it does underscore that this is a K-shaped recovery. It's not an even recovery across different demographics, and that might underscore that conversation for more fiscal help in the future.
Yeah, and Brian, you look at U6, got a bad reputation during the last recovery. Gary Cohn kind of brought that one back. 12% underemployment rate in the U.S. as of November. Certainly a number that also bears watching. All right, Brian Cheung from Los Angeles for the final time. Brian, we'll see you back on New York time next week. Thanks for joining the show.